Good morning, everyone. Welcome back to my channel. Listen, we back with some delicious content that you probably, people, you just, you just don't know about the content that I'm pushing out. Hey, I'm giving you guys ideas of stocks for you to do research on. I'm showing you just based upon my investing that it works. That if you stay consistent, that you can develop, you can grow a portfolio to 150, 250,000, and also like and subscribe to my channel. Join my journey so that as I approach my six-figure portfolio, hopefully it encourages you guys and motivate you guys to also go on this journey with me as well, so that you too can invest for retirement, or most importantly, invest so that you can leave outside the United States if that's what you're planning. If you want to just do if you want to do fire outside, if you want to fire and you want to retire early, but you want to move to maybe the Philippines or Panama, Colombia, London, Africa, Brazil, then more it's more than you're more than able to do so, and you can do it. So in this video, we're going to talk about 5 market beating dividend stocks that I will never sell, that I will continue to buy uh, to the day that I die, and that I will continue to buy in up markets, down markets. I'm going to talk about why and what makes these stocks so important. A lot of these stocks you guys have heard of because you probably have bought this product or the products for these particular vendors at some point of time in your life. But if not, then hey, who am I to tell you, right? So let's get into it. So here's my dividend portfolio right here. We're not going to go into detail about dividend portfolio, but uh, for the first stock is it's called Union Pacific. Union Pacific. If you are if you grown up if you played Monopoly, you know that the several properties that you needed to have was the boardwalk, maybe the blues or the oranges, and most importantly, to collect all four railroads. Once you collect all four railroads, um, I believe the dividend. If you had 3 railroads, you get $100 if somebody landed on you. If you had all four, then you get $200 every time somebody landed on you. Union Pacific is one of those. It's a monopoly, and so there's not that many railroads companies to go around that's in the United States. You have Union Pacific, you have Norfolk Southern, you have Kansas. It's like Kansas something, and then I think it's like another one. So uh, it's not that many railroads, and so if you can invest into one, you know that like no matter of fact that they're going to increase their they have price and power. They can increase their dividend according to like legislations, but it's not going to default because we need uh, railroads due to logistics and supply chain, and that's why I like Union Pacific. I had Norfolk Southern, but I like Union Pacific more. Hey, uh, don't judge me too hard. So with Union Pacific, uh, right here, with Union Pacific, it has a 2.74% dividend yield. It has a safety score of 88, which is fantastic. Has a dividend growth, has been increasing dividend for over 15%. So that's right around my alley, and it costs $190 per share. The second market market beating dividend stock where you can buy in the down market like a recession right now or up markets regardless is Altria Group. I like Altria Group because regardless, even though it's an industry where it's taboo to promote people smoking, but people are going to do it. People are going to smoke tobacco. People are going to vape. People are going to do that, and I don't do that, but I'm going to reap the benefits of people Vaping. Hey, you like it? I love it, baby. Let's do it. It has a above 8% dividend yield, has a delicious safety score, and it has a dividend growth of 4.4%. And it also only costs 45 cents per share. Me currently, I have roughly 59 shares of Ultra Grip, and I honestly say on a yearly basis, I buy at least $500 to $650 worth of Altria Group per year. Because I mean, I know this is a dying industry, but at the same time, regardless in the Ukraine, Russia, Eastern Europe, uh, United States, even in like Central America and like South America, like when I travel there, they smoke a lot. They smoke, and people know the disadvantages and the that smoking is bad, but people do it anyway. So pay me my dividends. Pay me my dividends, Ultra. So there you go. The next stock number three. It needs no introduction, but I'm going to introduce it anyway. It is McDonald's. Ooh, the golden arches, man, gotta love it. When you grow up, you're familiar with McDonald's with Happy Meals, the McDonald's commercials, and then also with the McDonald's, it just it has the brand recognition where when you when I was in Deutschland, Germany, or when I was in uh, Italy, or even Amsterdam, like they have even like that and Coca Cola and all that. The fries taste different. The burgers taste different. I would say, from my experience when I was like overseas, um, they don't cook it, like how Americans cook the burgers and whatnot. But I find that like overseas, it was like a lot more healthier, especially when I was in Amsterdam. And then also Amsterdam, they had like on the menu, they had the fries with the mayo and the ketchup. That's what they like in Amsterdam, right? So they like it. I love it. And so, but no matter where I was at in the world, from was the United States, Amsterdam, London, uh, McDonald's was still the same. They may cooked it different, but I still was familiar and knew that, hey, if I want a chicken nugget, if I want a Big Mac, if I wanted a burger, uh, I'm going there just for that. And so for McDonald's, it grew its dividend this year 10%, which is quite fast and unorthodox. It normally increases dividend like 7 to 8% per year. So, uh, and this one is going to be on the higher end. You're going to pay a premium price for McDonald's because McDonald's is a steady Eddie. Whether it's a recession right now, the interest rate going up, when people don't have enough money to go out, go out. What do they do? When I was in college, and we would after a college party or whatnot. I mean, if we go to Denny's, we'll go to IHOP. But if not, go to McDonald's. I get a 10-piece nugget. Get number 10. It would be like a 10-piece nugget, fry, sweet and sour sauce. Hey, keep it simple, right? Stock number four. I already hinted at it in my last section with the whole McDonald's is Coca Cola. Now, Coca Cola, I love investing to Pepsi, and I also love investing to Coca Cola. Coca Cola stock because it's a lot cheaper. Pepsi's is about 170, 175, 180 ish. It hovers around that particular range. And Coca Cola, I remember a couple of years ago, you could have gotten Coca Cola under $60. Coca Cola was Coca Cola was like 40, 45 bucks when I was investing like 5 years ago or 6 years ago. So it just shows that when you invest into stocks, that the stock market do go up and stocks do go up, especially with them making positive earnings and uh, free cash flow going up. The stock price does go up over time because I remember buying the stock uh, when it was at 40, 45 bucks. And it just shows right here. It shows right here that um, it doesn't show it shows my yield on cost percentage, but it doesn't show my yield. Oh, right here. There it is. So my cost per share is 47.73. So that just shows right there. So it's like the average. You know, with the average, there's gonna be certain numbers is above and certain numbers below. So with the 47.73, there's gonna show you that my tranches. There's times that I bought it above $47, and there's times when I bought it under $47. But when you average it all together, my cost per share is $47. But the cost of Coke right now is $60. So it's, and which is still steal, because if you were to buy Coke right now, you would get a 3.07% dividend yield. Me, when I bought Coke 5 years ago, my stocks are are giving me a yield on cost of 3.86%. That's because I bought it like 5 years ago, and then it has been increasing its dividend 3%, or yeah, like 3%, 3%, 3%. Now 3% is small, but over a time period, 3%, 3%, 3%. 5 years from now, like right now, my dividend stocks are yielding 3.86%. If somebody was to buy Coke now, they would only be yielding 3.4%, whatever the yield is right now. 3.7, 3.07. So that's the power of buying stocks, holding it, keeping it for the long run. The last stock, the last market beating stock that I would never ever sell in my dividend portfolio is Starbucks. I love Starbucks. I love the other four stocks, and my last stock. I love Starbucks. I love it. I was talking to my line brother last night, DJ, and I was just telling him like Starbucks, the brand recognition, going to the airport when we fly out the country, or flying go to Memphis to go see my other line brother Kendall. It's like, man, no matter you go to the mall, you driving down the highway, you going to work, uh, going to Walmart. Like Starbucks is everywhere. It's everywhere. It's in China. It's in China. It's in places where like Italy. It's in places where like they're known for coffee, and have such a big market share where they're like, listen, we don't care that the coffee beans for Colombia understand. Like we don't care that this country is probably known for coffee or known for blah blah blah. We're gonna put our stake in it. And the new, like the Gen Z and the millennials. I'm part of the millennials, and the generation under Gen Z. They love it. They like to buy iPhones. They love the Starbucks coffee. You know, I can't really say I drink Starbucks coffee like that, but I love the dividends. So hey, I love seeing people buy the stock, because keep buying Starbucks, because it increases uh, my likelihood as an investor to make more money, and for my dividends to continue to grow at a clip of 8 to 10%. I love it. I love it. Some people don't even get 8 to 10% increases on their job for their particular their rate on the hourly rate, right? They max probably 4%. Right here, dividend is increasing by 8 to 10%, sometimes 15%. I love Starbucks, and so overall, these are the five market beating stocks that I have in my dividend portfolio that I invest into, that I'm going to keep forever, that I'm not going to let go because of monopoly power, people buying it just to make themselves feel good, either when they probably lost their job or when they're stressed out. Altria Group, Mo, the cigarette company, tobacco company, or McDonald's, brand recognition, Coca-Cola, or whether you use it to, chase it with a drink, or Coca-Cola, you just drink it on a nice, hot, warm day. And then got Starbucks, where people just, it's a guilty pleasure, where uh, knowing that you shouldn't be spending like, $5, $7, $8 for a cup of coffee or premium coffee, but sometimes you just can't help yourself because it just tastes so good. So hope you guys enjoyed this video. I enjoyed it. Didn't want to go through my particular dividend portfolio in this video, maybe in the next video. So choose this video, and you can see how much I've made over the past 4 years. with dividend investing and just to motivate you even more. So it should pop up either right here or right here. Whatever it pops up, just click it, watch that video, like and subscribe to my video, and and don't forget share. Show your boy some love. All right. Hope you guys enjoy your day.